Welcome back to Black Cat Crypto, everyone. My name is Drake. I didn't take as much time as I thought I would with in between the last video and this video because this idea popped into my head and I really wanted to get this out for you guys, this information. We're at a bit of a crucial time frame in Bitcoin's history, and we've got to really talk about what's happening in Bitcoin with these new ETFs that are now traded on Wall Street with Bitcoin. So basically, with these new ETFs, we've taken Bitcoin from being kind of this side fringe thing in finance to being on Wall Street and opening up this whole new investment class, several new investment classes that will be coming into Bitcoin. And back in December and January, I was telling everybody that would listen, guys, there's these new ETFs, these Bitcoin ETFs that we've been denied for 10 years. And this time it's going to happen. And I think, some people thought I was, just talking and whatever. But I was trying to explain that this is the opportunity of a lifetime, because with Bitcoin, we've been able to kind of front run this big money and these big institutions on a new asset class. And we have never seen that before in anything, where retail investors could front run this big institutional money. So I was telling everybody that I could, that would listen, you need to get into Bitcoin right now. And I had some people listen to me, and I think they're doing really well, because Bitcoin, we've seen Bitcoin go from 38,000 to 60 to 65,000 now. So we've jumped in just 2 months, we've jumped over 50%, which is crazy, especially for traditional finance stuff. Bitcoin, we've seen those kind of things happen in the past, but it is pretty crazy for the part of the cycle that we're in right now. Usually right now we're trending sideways for a while, and things are boring and people kind of lose interest until the halving. But we are seeing something happen right now that really hasn't happened in Bitcoin before. Now, what these ETFs do is we basically have Bitcoin traded on Wall Street now. And so one investor class that's coming into Bitcoin now for the first time are boomers, for one, this demographic of boomers that are really comfortable with investing on Wall Street and using their Fidelity and their Merrill Lynch accounts to buy stocks and bonds and things like that. But they're not comfortable and they're not familiar with going to a cryptocurrency exchange like Coinbase. So they just never have. They finally have the chance to buy this new technology on a platform that they trust and they're familiar with. Now, I personally wouldn't buy a Bitcoin ETF because I want to have that self-sovereignty, right? Like, I want to hold my own Bitcoin. I don't want to have to trust Fidelity to hold my Bitcoin for me. But this is a good option for some people. And, these boomers and some of these institutions now that are coming in, they don't want to have to hold their own Bitcoin. They don't want to have to remember the seed phrases. They don't want to, especially for institutions, they it's really hard for corporations and institutions to go through this whole deciding process on how this company is going to hold, who's going to have access to the keys, what wallets they're going to use. So these ETFs make things for institutions way more simple. But for these people that are getting in that don't want to necessarily go to an exchange, this is a big point where they can get into this space now too. And I think these ETFs will really get those people into Bitcoin, these boomers and people that are just really comfortable with their Wall Street accounts are going to see that Bitcoin, they're going to see the performance of Bitcoin, and they're going to start digging deeper into Bitcoin, and they're going to realize there's that self-sovereignty issue, and then they're going to move to their own custody. So this is kind of a funnel, really, but especially with the institutions, this makes it so much easier for institutions to get into Bitcoin now. And I know we haven't seen an avalanche of institutions yet. There are some, but we haven't seen an avalanche. And I think we're really going to very soon. So I think we're at a crucial point in Bitcoin's history where we can still front run a lot of this big money. Now, I'm going to jump over to a clip from Matt Hogan, and he is from Bitwise, one of the newborn 9 Bitcoin ETF companies that is providing this service. And everything he says in this video is really interesting, but I really want you to listen to who he says is buying, and the host really presses him on that. So listen in to this.
What's been driving this price action on Bitcoin, Matt? How much of this is retail investors investing directly in Bitcoin? How much of it is the ETF? How much of it is institutions in the ETF?
Absolutely. It's a great question. We're seeing enormous demand for the Bitwise Bitcoin ETF and across all of these ETFs. And the answer is it's all of those categories. You're seeing retail investors come into these ETFs. You're seeing hedge funds. You're seeing RIAs or independent financial advisors. I think there's an even bigger wave coming in a few months as we start to see the major wirehouses turn on. But this has been Bitcoin's IPO moment. It's in a new era of price discovery. And I think prices could go substantially higher from here.
Let's talk about where they could go in just a minute. But I just want to go back to this idea of who you think is buying these ETFs, meaning how much of this is retail versus institutions?
Yeah, absolutely. You know, when these ETFs first launch, they're not turned on at the major wirehouses, at the major institutions. So the initial demand out of the gate for any ETF, including these, is primarily retail and independent financial advisors and hedge funds. So I think that's the primary driver. That's what we're seeing. Right. But I'll tell you, after this meeting, I'm getting on a plane to go talk to one of the largest institutional consultants in the U.S. about this ETF. So we're going to see that next wave of institutional capital.
You did mention hedge funds, which I will put in sort of an institutional or professional category. In terms of this big move, do you think it's that money that's pushed this, or do you think it's straight retail?
Oh, I think it's both. I think it's both. It's just new demand. If you think about Bitcoin pre the ETFs, there was only a small set of investors who could buy it. Now almost everyone can buy it, and the supply-demand dynamic is just off the hook. There are 30,000 Bitcoin purchased by ETFs this week alone. Bitcoin miners have only created less than 3,000. That's what's driving the price, and it's both hedge funds and retail and that advisor community.
Obviously, you have one of these, so if you say it's going to go up, people will say you're talking your book. But if you were to say it's going to go up, where do you think it's going to go?
Absolutely.
And describe exactly why.
Yeah, sure. At the start of this year, in December, we actually published our 2024 predictions. And we said that Bitcoin would trade to new all-time highs above $80,000 a coin. Based on what we're seeing in our ETF and these other ETFs, I think we have to revise that upwards. It could be 100,000, it could be 200,000, it could be higher than that. There's simply this massive supply-demand dynamic going on, net new demand and a fixed supply, and actually a reduction in new supply coming up in April with the halvening. Sometimes investing is complex, sometimes it's easy. With Bitcoin right now, it's just about supply demand, and there's too much demand and not enough supply.
So really interesting there, but the main point is that right out of the gate, like he said, this has mainly been, we've mainly seen retail investors coming in, new retail investors coming into Bitcoin. So we're still early. You can still get into this Bitcoin and front run most of this big money that we're going to see coming in very soon, I think. Now, I'm going to show you guys a few more instances of how we're early and people that are looking to get into Bitcoin, eagerly pushing to get into Bitcoin. So I want to show you some things that have happened over the last 2 or 3 months with one big bank in particular. Now, if you don't know who Jamie Dimon is, he is the CEO of JP Morgan, one of the largest banks in the world. And he has been on an absolute tirade about Bitcoin. But I'm going to show you this was in December, before these ETFs were due to be approved. And he went before Congress and all but asked them to deny these spot Bitcoin ETFs. He didn't want them happening. And just listen to this first clip and see what you think about what he says.
I've always been deeply opposed to crypto, Bitcoin, etc. If I was the government, I'd close it down.
Okay, so really very against it. Okay, so I want you to remember in that clip that he says he's very deeply opposed to crypto and Bitcoin. That's going to be important in a second, but it was literally that came out one day. He testified before Congress one day, and it was either the next day or at least within the first week after he testified to Congress that this news came out. Now watch this.
And it's in a move, it's sending shockwaves through the financial world. Asset management giant BlackRock has filed its Fifth Amendment to its spot Bitcoin ETF application with the SEC. This update includes a surprise element, the addition of JP Morgan, Chase, and Jane Street as authorized participants. This news is particularly noteworthy given JP Morgan CEO Jamie Dimon's past vocal criticism of Bitcoin.
So it goes back to that old adage, watch what they do, not what they say. But it gets even better, okay? So those two things happened within a week. And then we had Davos and the World Economic Forum meetings in Switzerland. And Jamie Dimon got on with CNBC hosts and continued his tirade. And he actually, in this clip I'm going to show you guys, he had an all-out pretty much meltdown on the cameras and, just went off about Bitcoin. So listen to this.
This is the last time I've ever talked about this in CNBC, okay? So help me God. Blockchain is real. It's a technology. We use it. It's going to move money. It's going to move data. It's efficient. We've been talking about that for 12 years, too, and it's very small. Okay, so I think we've wasted too many words in that. Cryptocurrencies, there are two types. There's a cryptocurrency which might actually do something. Think of a cryptocurrency as an embedded smart contract in it, and that we can use it to buy and sell real estate and move data. That may have value.
The idea of tokenizing things.
Tokenizing things that you do something with. And then there's one which does nothing. I call it the pet rock, the Bitcoin or something like that.
Okay, so first point, going back to when he testified before Congress, he was very against crypto and Bitcoin. Now in this you see him flipping seemingly, on crypto generally, because now there's a use case to it and we're using it. Okay, so let's get back into this.
And so on the Bitcoin, there's, first of all, and I'm not trying to make a joke here. There are use cases: AML, fraud, anti-money laundering, tax avoidance, sex trafficking. Those are real use cases, and you see it being used for hundreds, maybe 50, $100 billion a year for that. That is the end use case. Everything else is people train among themselves. So
Speculate.
Yeah. Now, okay. Now, my last
we're all
statement.
Criminals.
The last time I ever talk about Bitcoin is I defend your right to do Bitcoin. I think.
Okay. Second point. I defend your right to do Bitcoin. Really? Really, Jamie Dimon? Because just a few weeks ago, before you did this interview, you were telling Congress to shut it down. Now you're defending my right to do Bitcoin? Come on.
It's okay. I don't want to tell you what to do. So my personal advice is you don't get involved. But I don't want to tell any one of you what to do. It's a free country.
What do you make of BlackRock? What do you make of the other firms, the BlackRocks of the world that obviously, and Larry Fink changed his view of this, obviously.
Yeah.
And maybe he changed his view because you think he genuinely believes in Bitcoin, or believed it because he thinks that there's a marketplace for it and he wants to be part of that market. But what do you think of there's about a dozen big financial companies, Fidelity included.
Number one, I don't care. So just please stop talking about this shit. And I don't know what he would say about blockchain versus currencies that do something versus Bitcoin that does nothing. And maybe that's not different than me. But, this is what makes a market. People have opinions. This is the last time I'm ever going to state my opinion.
Gold really doesn't do anything either.
Yeah, but gold's limited in supply.
So is Bitcoin.
And it's been used. So you think so, huh?
I do.
I think there's a good chance that when we get to that 20 million Bitcoins,
they go to 42.
No, that Satoshi's going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased.
I think, man.
How the hell do you know it's going to stop at 21? I've never met one person who told me they know for a fact they take that as
mathematically. It can't happen because by the last one will be mined in 2150, and it gets harder and harder every time there's another halving. But Jamie, looking back over,
you guys do what you want, I'll do what I want.
As for gold, you can the 6 characteristics that make gold valuable for 4,000 years. They're all present in Bitcoin. That's all I'll say. And
Okay, so pure comedy there, really. But you kind of start to see him flip on some things, and that last comment about Satoshi, calling Satoshi Nakamoto. Saying he's going to come back and erase the whole project. Come on. He's got to be smarter than that. Jamie Dimon has to be smarter than that. You can't, it wouldn't matter if Satoshi came back. It wouldn't matter because the code isn't his anymore, or hers, or whoever Satoshi is. The code is being run by a massive network of miners around the world, and no one has control over that anymore. It just is what it is. So even a few weeks after he was saying all these things at Davos, he came out and kind of apologized, I guess. We're going to jump over to this news article by CNBC. And Jamie Dimon says he regrets calling Bitcoin a fraud and believes in the technology behind it. I mean, this doesn't get any better. So this article says JP Morgan Chase chairman and CEO Jamie Dimon is backpedaling a bit on his earlier criticisms on cryptocurrencies. In September, he called Bitcoin a fraud. I regret making that comment, he said Tuesday on Fox Business. The blockchain is real. So even further, he's either flip-flopping or he's talking out both sides of his mouth, honestly. Now, I'm going to take you back over we're going to look at another article, and this is from Cointelegraph, but this was just reported February 16th. So big banks are nudging the SEC for a slice of the sweet Bitcoin ETF action. So we're going to scroll down, and I'm just going to read a bit of this to you. Major banks and financial institutions in the United States are pushing the United States Securities and Exchange Commission, the SEC, to readjust its definition of crypto assets, which could allow them to play a larger role in crypto. So guys, this is crazy. These major bank associations are now urging the SEC to change the rules so they can own Bitcoin and they can handle these Bitcoin ETFs and make money. So we're starting to see these banks realize that they cannot stop this thing anymore. They're going to start flipping on it, and they need to somehow pivot into a role that gives them a chance to still be relevant. They're going to have to adapt and assimilate, or they're going to die. If banks keep trying to fight this, they're going to be late to this new party, and they're going to be the banks that don't make it. Now, further into this this article, you can see that a group coalition comprising of Bank Policy Institute, American Bankers Association, et cetera, are the ones that are writing this letter and trying to get the SEC to change these rules. So I saw this and I was like, I'm going to look up, one of these. And I just randomly chose, I looked up American Bankers Association, and I went over to their homepage. And right on their homepage, it lists their sponsors. So we've got Ally, and we're going to scroll down. We've got Citibank, or City Communication Development, or Community Development. And historically, these guys have been pretty anti-crypto also. So it's surprising to see that. C-Note, Federal Home Loans, and surprise, surprise, JP Morgan is part of this group that's urging the SEC to let them own Bitcoin easier. So guys, I don't even know what to say. Obviously, this goes to help them, but first of all, they're either pivoting massively in a very short period of time, or they're talking out both sides of their mouth and they're saying one thing and doing another. And I tend to believe the latter, because they can't buy with these rules that the SEC has. They can't really get into Bitcoin the way they want to. And it's hard, and it's expensive for them. And so Jamie Dimon wants to keep prices of Bitcoin as low as possible until they can get into it easier. And that explains it all. Now, I want to jump over to another video that another bank put out. And this video is actually really well done. It's pretty informational about Bitcoin and blockchain technology. But in this video, this bank pretty much comes out and says, if banks don't assimilate into this new technology and find their way in this new paradigm, you're going to have a hard time surviving. So it's really interesting to hear a bank actually come out and say that directly. But watch this video and see what you think.
When people hear blockchain, they often think of Bitcoin. But Bitcoin is just one application that uses blockchain technology. A blockchain is simply a chronological list of events saved in a digital file. The complete list of events is called the chain, and each change to the list is a blockchain. Blockchain facilitates the movement of money, votes, or the ownership of property and goods all across the world without the need for a central administrator or intermediaries. Blockchain is a decentralized system where all participants hold a full copy of the blockchain. Whether it is a private or public network, this distributed network ensures security is guaranteed. When a transaction takes place, it is verified by the group, digitally time-stamped and added to a database of previous blocks in the chain. There is no doubt about who owns what or when they got it, the evidence is all there. To compromise blockchain, you would have to hack every computer holding a copy of the blockchain all across the world, all at the same time. An impossible task. There are many transactions that currently involve an intermediary that could be revolutionized by blockchain technology. Its implications for the banking sector are obvious, and those who are ready for blockchain may be the ones who prosper.
Okay, so interesting to see them really call themselves and the entire banking industry out like that. Now, one other reason why I think we're still early on front running a lot of this big money is that there are a lot of financial programs and platforms, like Vanguard is undoubtedly the biggest one, but Vanguard has come out, even though these ETFs were approved, Vanguard and Edward Jones, and there have been just a slew of these financial platforms that have come out and said, we're not going to allow our customers to invest in these products. And so we still have this whole sector of Wall Street that isn't being allowed to participate in these Bitcoin ETFs even. And with that said, we've seen over the past few weeks that a lot of them have started flipping and allowed their customers to buy into these ETFs because they've had such backlash from it. And what's interesting is the biggest one is Vanguard, and they're, as far as assets under management, they are right up there with BlackRock. They're right under BlackRock as far as the biggest asset managers in the world. But Vanguard, the CEO of Vanguard, Tim Buckley, came out after these ETFs were approved and said, we won't be letting our customers buy these as long as I'm CEO at Vanguard. And interestingly enough, he is stepping down within weeks of saying that. And it's interesting, is this because of the decision that he made to come out and boldly tell his customers what they could and couldn't do with their own money? I mean, people don't like that. When somebody comes out and says what you can and can't do with your money, usually that's a bad PR move. And in my mind, this was probably a big career mistake for Tim Buckley. But this is just, it goes back to showing you guys how early we really are. There's these major platforms that are still not allowing their customers on Wall Street to buy into these Bitcoin ETFs. So we're still really early in this. But getting to my point, guys, this is an unprecedented thing with Bitcoin. We have never seen in any other asset something that we, the people, the working class, could buy and front run big money like this. It's absolutely unprecedented. When stocks are issued, they first go to these major big money like clearing houses, and this is the first asset that we have been able to jump the gun on big money, and they hate it. And they're hoping that enough of us stay out of it that they can get in and at least be somewhat early to the party. And I hate making this video in a way because this really is kind of, it's going to come off as like this FOMO, fear of missing out video. And I don't like that kind of crap, really. But it is a pretty crucial time for Bitcoin, regardless of when you get in Bitcoin. The technology is going to make the world a better place for us as a whole. And so in that fact, it doesn't really matter when you get into Bitcoin. It's going to be a great thing for the world regardless. But it really is a point where you can get in, and in a few months, we're going to look back at 60,000 and go, man, I should have bought more. And especially 4 years from now, we're going to look back at 60,000 and just probably cry ourselves to sleep, honestly. But with that said, do what's right for you. Don't FOMO into this and make stupid decisions. Like I said, if you can't handle the volatility, don't buy in, because we're going to go up and we're going to have these crashes all the way up to 200,000 or wherever we end up going this cycle. We're going to have these 30% pullbacks. And if you're not expecting that and you can't handle it, don't get into Bitcoin. You're gonna panic sell and you're gonna lose some money. So don't do that by any means. And with that, guys, I'm gonna wrap this video up. We are gonna jump over, and I am gonna put this flyer up. This is Ez's Rescue Ranch. If you haven't heard me talk about it before, this is a small animal rescue. Any little bit of donation really helps them out. They have a lot of responsibility taking care of all of their animals, and it takes a lot to run an animal sanctuary, guys. So any little bit of anything you can donate to them is really going to help out. Their PayPal is at the bottom of that flyer, and I will leave their info in the description of this page or of this video also. So I will see you guys in the next video. Bye.